Good evening. This is the Elliott Wave Daily Update for the NASDAQ 100 and the S&P 500 for Wednesday, July 17th, 2024. I'm going to start with the NASDAQ, and I'm on the hourly chart. And today, I think that the difference between the two counts that I was showing have made itself very clear, at least to me today. The decline today, of course, overlapped wave one. If this was going to be a 4, it overlapped wave one, not just by a little, but by a lot. In fact, it dipped below 20,000 a couple of times, and then at the very end of the day, reaching the low for the day at 19,965.75 before having to race back up with a couple of earnings and just, buyers running in after hours, et cetera, doing a little bit of position squaring before everybody has to go home, so on. Now, what I really have done, of course, is I've put back what was my preferred, but I felt that, as my discussion yesterday, we had a chance that it was not going to be, that it would flip over to be the alternate, with the alternate slipping over into preferred, and now it's been put back. Now, primarily because today's activity dropped and invalidated that this would be a fourth wave, at least a sub-minuet fourth wave, because it overlapped wave one. Regardless of the feeling that, well, even if it was in a overlap in terms of that it was a diagonal, that just kind of blew that one out of the water as well, in my opinion. So it gets left as 1, 2, 3, 4, 5. And then I just put the balance up there. So it's sub-minuet, minuet, minute, minor. Minor wave 3. Been looking for this for quite some time. And also, there's a possibility over in the S&P that yesterday's highs completed that minor third wave there. It's still not abundantly clear like the NASDAQ did today, kind of making it more abundantly clear, at least in my opinion. Now, the way things have traded lately, it wouldn't surprise me to walk in tomorrow and they go, nope, 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 and they just buy it up 400 or 500 points. And just because that's the way traders are trading now. It is crazy. I will give you that. But I will say, as a day trader, boy, when they start to do that, it just gives an abundance of opportunities for trading, profitable trading. Now, I have to add, as far as trying to determine Elliott and what the move is representing in terms of labeling an account, has been extremely difficult and actually remains difficult because of the nature of how things are trading. Now, you may think, well, does that kind of make Elliott Wave obsolete? It's like, I don't think so. I think that there are some changes that are becoming clear due to quantitative trading, due to the algorithms now, which control basically pretty much everything. But I still think that there's enough human emotional reactions going on that whether it's being brought on and executed through algorithms, the underlying is still, really kind of showing me that a lot of the trade is still, I would think, kind of gets to be more emotional, even though it seems very mechanical. If that makes sense, please accept that as a reason. I still believe that Elliott has a purpose here, and we're just now going to see how this all starts to unfold and how long maybe we'll have to wait before we get additional confirmation. Because right now, as you can see, if they just kind of turn it, we're left with an ABC down. And then somehow it's going to have to, if we get back above, say 20,000 900, let's say, well, then it kind of blows this out and puts something else back up. I don't know what that is right now, but I am not going to discount that the market has gotten a lot more volatile just in the intraday moves from one day to the next. And so, as a trader, you need to allow for that. But getting back to the NASDAQ, getting back to account, if I'm placing that minor third up here, ultimately then, what I'm looking for is an ABC down into this zone, which I've left on for quite some time now. And the reason, because minor 4 should find its terminus, its endpoint, within the price territory of the previous fourth wave of one lesser degree. And that's the minute degree, and that's the fourth right there. Now, Elliott actually was more specific, and the terminus, he was saying it should find its low or its completion point at the terminus of the fourth wave of one lesser degree. There's different interpretations of that, but I have read where that is part of what he said. And that would then again put it down here towards 17,400. Now, how is it going to drop down there? Well, it should drop down in an ABC structure overall, being that it's a fourth wave. It could look very similar to this, where we had an A, a B, and then a devastating C, bringing it all together and down. Now, again, this was in April, March to April of 2023. Oh, excuse me, March to April of 2024. Well, not that long ago. So I would suspect that we're going to get a similar type of a move. And you can see just from there, this was kind of complicated, just kind of up, every which way, then a sell-off, then another rise up, and then a nasty sell-off. And if we could get that on this type of a degree, 1 degree higher, and we'll get that move, bringing it down, bringing it up, and then bringing it back down. So again, it was a zigzag. I'd be looking for a zigzag, which suggests that the A and the C wave will be 5 waves. And that would be very fitting. Now, what I've also marked, here you're going to see support levels. And then out here, we have the support levels for that minor fourth wave. Okay. And right now, as it stands, 0.382 hits it right on the nose, right there at that endpoint for the previous fourth of one lesser degree. So the 50 I'm leaving there for two total kind of a stronger downside swing in the NASDAQ, which also could happen. And this one being probably more than likely what we're going to enter into to get this larger fourth wave complete. Understand as well, as I've been continuing to say, that this just completes a minor fourth wave. Minor fifth wave then would be expected to come back up and move above 20,983, which is, well, actually 18, whatever, let me get right onto that. 20,918, no, I was right, 20,983 or 984. And then in projections, we've shown above 21,000. Now, that would continue to be the expectation. Even if it were to get down to here, I'd be looking for a massive rally back up to complete intermediate wave 3, and then have an intermediate fourth wave decline to be followed again by an intermediate fifth wave rally. So we still have a lot of play left to do. Those who don't kind of see it that way, they're just worried about what's happening now. So we did see a pretty strong flush for NASDAQ. Particularly, we saw Apple drop, AMAT getting hammered today, AMD down strongly. Even Amazon still showing strength, but down on the day. Broadcom, pretty strong downside today, seen in Broadcom. Coinbase, yeah, you know, even though that Bitcoin managed to not drop as heavily, Bitcoin kept catching bids, as a matter of fact. Other stocks of note, Meta, just almost feeling like it was a little bit in free fall, down over 27. Microsoft down 6. Now, again, this all came about after, excuse me, news from chip makers, particularly Taiwan, that were basically I'm not really catching the whole story, but there was something that would impact the chip users here, and that was Apple, Microsoft, NVIDIA, which is actually a producer, but they have components that they get from TMC. And so those just started it. And then it just kind of gained traction, and we saw it kind of a little bit more broad base. SMCI took it strongly on the chin today, down over, I think it was 60. And so they actually are dependent on Taiwan for their chips. So again, it tells me a couple of things that I have been discussing, that I have felt that the NASDAQ, in particular, a lot of these AI stocks were just overvalued. They were overbought, and they have been in an overbought, but that did not seem to stop the push and the strong push. In fact, even with the market, particularly the NASDAQ, showing clear signs that it was going to gap lower this morning on a cash basis, which it did, they still had buy orders lined up in Apple to be executed on the opening. And the stock got pushed back up to 231 before it got hammered. And it just started to drop and drop and drop and drop and drop. Now, that always is still kind of amaze me, because it's just the way that the system and the SEC are making these fund managers and these asset managers do their job. They're not allowed to cross anything, to just make it a better price for the buyer and to just satisfy the sellers at a certain level. They can only put all the buy orders through, then they got to put all the sell orders through. And it just kind of, I don't know, maybe that's just me in the way I see it. Maybe it's not really that way, but I find it to be a little bit sketchy. Back to the market. So what I've set up here is that those are the four minor wave 4. These are the support levels. 236, 382, and 50. Those are the 50%. Those are the most common, 382 being the most common. And then otherwise, I've also set up fibs coming down, and that's because we've just finished 5 up on a minuet degree. And so now I want to track it coming back down, where the market, because don't forget that even though I'm not looking for a smaller correction inside here, there are a lot of firms and a lot of trading computers that and algorithms that use these fibs, and they'll take them from there to find support as the market, if and when the market should continue to decline. So today, I'm going to slip back down to my hourly chart. The market quickly came down and broke below the 0.236, and that is from the rally that began from the April 2024 low up to that current high. So there we've got that, went through it, and now not even kind of close to fighting its way to get back to it. It slid through it, and it then, of course, broke 20,000 a couple of times strongly right after the bell, as a matter of fact, getting down to 19,965. So I think that that's pretty strong in terms of that we're likely done with minor wave 3 and we're beginning minor wave 4. I'm expecting it to be 5, and what I'm going to be looking for is a minor degree 4, but within it a minute A, B, and C. So what I'm starting with is the minuet degree. So minuet 1, 2, 3, 4, 5 for minute wave A, and then an ABC for minute wave B, and then another 5 waves down for minute wave C. And the interior are going to be, I mean, the subdivisions, of course, will break down even further. But right now I'm sticking with a minuet degree for my start to count the 5. So I'm counting this first leg as wave one. Then we hit an ABC up for wave two. Then it starts to subdivide. So we have 1, 2, 1, 2. So if anything, this would be sub minuet 1, sub minuet 2, and then a sub sub. So I don't want to cloud up my chart quite quickly. But you could almost say 1, 2, 1, 2, and then we start again, and it also subdivides. So where do we kind of lie, or where do we sit with the 1, 2, and now we're inside? I think we may have finished the internal 3. So in other words, minuet, and then it's going to be sub minuet wave 1, sub minuet wave 2, sub 1, sub 2, sub 3. Then we get a 4, and then we get a 5, and that completes then the sub, and then we get another 4 and a 5, and that completes minuet wave 3. So we've got a ways to go yet. Not tremendous, but we've got some additional downside to do. But right now, maybe we can get a small pop, and actually, I don't know how small when you consider how far it went down. But if we're looking for a small 5, I can add some fibs here. Now, again, depending on how strong the market wants to get, but we could think maybe we get it back to 20,214. Now, that would be 382. But again, that's going to show some strength. But in terms of how deeply we dropped today, a 200-point rally, not all that much, actually, in the larger scope of things. So that would be 382. 236 comes in at 20,001, right there, 118, 120. So, and then we have again that 236, which has got through, and that's at 31. And so it may also provide some resistance on the way back up. So those would be my points. And again, we'd be looking for an ABC up, then another leg down, and another ABC up, and another leg down. So I think ultimately, we sure can end up down here at 1.618, and that would be where minuet wave 3 would be equal to 1.618 of minuet wave 1. And that's 19,745. So I'm going to leave that right there. And that actually, folks, just takes us back to the area of that minuet fourth wave within that rally up to the all-time high. So that's 19,726. So we got 745 down to 726. And then I think that completes this third. We get another minuet 4, and then we come back down to minuet 5. And then we're still looking probably down here, 19,603, just to finish this initial third. Then we get a 4, and then we come back down into 5. Let me see, is that right? No, this might complete the third. And then we come back up, and then this might complete that larger. So we get that 3, maybe even wave A. Not sure. We're going to let this play out. 1, 2, 1, 2, 1, 2, 3, 4, 5, a 3, 4, 5, a 3, and then a 4 and a 5. Maybe that wouldn't contain it. 19,006. We have additional down at 19,177, and then a real blowout, if it should happen, comes in down here, and that's related to this third wave, and that's 19,000 almost. So again, it could start to appear to be more like free fall. And fourth waves can be that way. And the fact that we went up so fast, so high, just the thinning of the herd, so to speak, could really push this market, as we saw today. In fact, with the Dow up over 200 points today, and the NASDAQ down as heavily as it was, kind of leaves us in a weird place, because the unity or all the markets being in sync and going in the same direction at the same time did not exist. For a better part of the morning session, the Russell was up today. So it was the Russell and the Dow. Finally, the Russell decided to give it up. And I believe in the Russell, it's also entering into a fourth wave, and needs to finish that. So that together will possibly just let this one at least complete down through the A wave. Moving averages, boy, what a difference a day makes. So I'm going to go out to the daily because that's the one where we really make our comparisons. And you can see we broke that 20. And once we did, it slid hard. We broke the 20, which was at 20,237 at the time. It actually was a little bit higher, 270 somewhere, I believe. And it broke it, and then it just slid. And we saw the acceleration happen. And that's what we expect to see once we begin to break. When as soon as it broke the 13, you saw acceleration. Broke the 20, we saw additional acceleration. And so next up will be the 50, which right now is at 19,616. Now, whether we're looking for the completion of this initial smaller third, maybe it can find the support here, bounce off, and then on the way back down, once it was broken, you're going to see some additional acceleration. And again, nothing in between there, right? So it's what I call dropping more until it's like similar, smaller black hole. So again, this is all going to roll out. And if it truly is beginning now, you know, mid to late July is often when we start to see some weakness in the market develop. And being that it could be corrective, it could take us right through sometimes into October. In this case, I'm kind of thinking maybe September, but October could also be in that picture. And we'll see a lot of changes come up because a lot of the call buying has been pushed to September and then the end of the year. So that's also just going to have a play in how things all pan out. All right, so let me just drop this back down to the hourly chart so we can take a look there, and we can see that look at these moving averages, just like wow, everything. We broke the 200, we broke the 50, we broke the 20, we broke it all, and this was up in here. And then it just started to go. And now it just raced, just follows the market. But they're all turning sharply, even the 200, sharply. So, writing on the wall, I believe. Now, not to make things easier or more difficult, but boy, the S&P. Now, it also kind of keeled over today, and on the hourly chart, broke the 20, broke the 50, both turning lower. 200 broke it, trying to get back up to it, failing, providing some resistance. So it kind of starts to go a little bit flat, but it's rolling. These are already have rolled. Now, all I've done here is put that 5 up here. Now, because this really is not very good looking. And at best, if I take this and I put it down on just a line chart, you're going to see the 4 could be here. That was that, I believe it was CPI or PPI, that they were just kind of bing, bing. You know, and so what the line chart shows us is like the bar just went there, but it didn't close anywhere near there. It closed up here. So I could get a 4, and then I get an ABC, A, 1, 2, 3, 4, 5. And as ugly as it is, it may just be what is for real. Now, over in the SPX, by chance, even if I take it out of here and put it back on the bar chart, you can see we got this 1, 2, 3, 4, 5, 1, 2, but see, same deal. So it's a very difficult new high, new high, new high. So is it a very bizarre diagonal to finish this 5th wave? Possibly, possibly. And then, of course, this is the cash market, that huge gap, giving us some view into, wow, okay, this is done. So I didn't there, but over in the S&P, I mean, in the futures market, I did mark the 5. I'm not putting anything above it because, boy, I want to see what they do tomorrow. I really do. My gut tells me they should follow through. We might get a rally to begin, a little bounce because it was a pretty strong, S&P down 75, so not a bad, stronger move. Get a little bounce coming back up, and then we get another leg down. And that would be more convincing that this is done and we're working our way lower in its minor fourth wave. If that's being the case, I just bring it out to here and you can see that's the ticket. We're looking again for the April lows. The April lows, basis the cash, is going to be 49.53. Basis the futures market in the September contract, we're looking at 5,085. Right in there. I'm pretty sure that's where it is. Excuse me, 5,086. So that's the previous fourth of one lesser degree, being that if I put that minor 3 up there, that's where it should kind of come in. S&P, very difficult here, very difficult. If I had to, even if I'm going to look at this, like what could it be? We got a 1, 2, 3, 4, 5 quick, and then a very small, a very, very small. So it just, a lot of it's not making a whole lot of sense. If I'm even saying 1, 2, 3, 1, 2, 3, 4, 5, it has to be there. So there's this, and then it makes another new slight low, and then it rallies back up. So market is very touchy. Market is kind of just getting, I think, confused. What should it do? And so we're getting pushed and pulled in all kinds of directions. Because guess what? We just entered into earnings. So this is kind of the bizarre thing to happen as earnings really start to roll out. We're seeing all of this happen. We've got a sizable expiration coming on Friday. It's a lot of stuff kind of coming through. So in the S&P, it's more difficult for me, but if I had to, I would, if I'm putting that done, then same deal, I'm going to, let me just do this so I can get my bearings. I would put in my fibs just for this move, right? I'm putting it all the way up to there. So that gives me fibs on the whole thing. If I wanted to go and look at what my fibs are going to be for this, then I have to come out to here. And now I put my fibs up again. Oops. Come on. And they're going to go all the way up to here. Now bringing them back down, let's go back to that hourly chart. And let me go back out to the 4 hours so I can get that window. So you can see again, 0.236, 0.382, and it's right in between, coming back down to that low. So that works. In between all of that, we have that it hasn't even come like the NASDAQ did, but down to the 0.236 level. So is there potential that the S&P will get bound up like the Dow and just start going back up again? It really can. It really can. It's strange to think, but stranger things have happened. I'm leaving the 5 there, but you'll notice that I didn't put the minuet wave 5, the minute wave 5, and the minor wave 3. Maybe tomorrow I'll get enough additional information or confirmation from the market and I'll do so. But I'm putting up all my fibs as if it has. So right now I'm still looking for it at least get itself below 56.21 and knock out this as being done. Wave 1, which of course the NASDAQ slaughtered today, here sits just below 5,600. I'd like to see that happen, which gives me more confirmation that this is done as well. So still in the waiting game here in the S&P. What can it do tomorrow? I'm expecting at least we've come back down on the hourly chart. We're very oversold. We're starting to bounce a little bit out of it. RSI giving some signals that we likely might go up. And if that's the case, you might take just fibs from there down to there to see where we come up. Now, if I come down to the 15-minute chart, It's hard, difficult to go. Do we go from here to here, or do we go from here to here? Either way, I don't think it's a complete five. So I couldn't tell you. I think we'll find some resistance at 56.50, some additional resistance at 56.72 to 75. We have resistance at 70, again up here at 80. So at the different price points is where I'm going to find resistance. But right now, we're coming back up. We're getting ready to touch the 20, which is sitting at just at the same place at 56.43, 56.44. A break there, that should give us a nice run back up to the 50, which is at 56.57, and then 200 is at 56.77. All of those should find some resistance and possibly a turning point for the market to come back down. Sorry that I'm not filling in more of the blanks here in the S&P, but it's not really giving me much to kind of work on, and I'm open for other interpretations. So I know there's a couple of you out there that very graciously, I say, put up their own thoughts, and Daniel being one, and there's a few others that also contribute, and I appreciate it. All the information that we can give each other, as long as it's usable and it's accurate, why not? So I invite all of you to put in your opinions. Anyway, that's where I'm going to leave this for today. Tomorrow now, as far as numbers, we have initial jobless claims, Philly Fed manufacturing, U.S. leading economic indicators. That'll be an interesting one. And then 1, 2, 3, 4 Fed presidents, Fed governors, all out speaking from 10 a.m. to 7:45 p.m. So they'll all be out giving their voices. And one today, I guess it was Christopher Waller or Tom Barkin, one of the two. I said a couple of things that the market kind of went, what? I don't know. So in any case, initial jobless claims, Philly Fed, U.S. leading economic indicators. First two come out at 8:30, leading economic indicators, 10 a.m. And that's going to do it for today. The next update will be on Thursday, July the 18th.